Well, good afternoon, everyone. Thank you for joining us. I know there are still some people coming on, but I think we will go ahead and get started in respect of your time. Welcome to our webinar today on Investigate Incentives. My name is Roberta Pinkerton. I'm with the Nebraska Chamber of Commerce. We're pleased today to offer this webinar in cooperation with the Nebraska Department of Economic Development to provide our members and businesses across the state with information about ImagiNE Nebraska, our incentive program. We have two speakers with us today from the Nebraska Department of Economic Development. Before I introduce them, I'll just give a little bit of information about the relationship between the Nebraska Chamber of Commerce and the Nebraska Department of Economic Development. We're so pleased to be a partner with you today, Tom and Jacqueline, in providing this information. In 2019 and 2020, the Nebraska Chamber, along with a lot of our business partners, led efforts to extend and modernize Nebraska's mainline economic incentive program. The result of that, as all of you know, and are part of today, is the ImagiNE Nebraska program. That was adopted along with several other groundbreaking tax relief measures in LB 1107. So as we work to create this program and expand the incentive program, we really tried to keep an eye towards greater accessibility for small business and entrepreneurs and startups across the state. The initiatives that were generated through Blueprint Nebraska. We wanted to provide greater flexibility with the benefits to support workforce solutions, streamline the efforts from the application through the audit, and really focus on our key growth sectors. This year during the legislative session, there was work done to make a few adjustments along with DED's suggestions. Those adjustments provide provisions to account for some remote work jobs. So we're pleased to be here today with the Nebraska Department of Economic Development and bring the details of this program to our members and businesses across the state. So let me introduce our guest speakers today. We have two people with us. Tom Saltzman is the division manager for the ImagiNE Nebraska Act. His team works as a resource for businesses looking for information about ImagiNE Nebraska, and he oversees the entire application process. Tom started his career as a member of the United States Marine Corps. So thank you, Tom, for your service in the Marine Corps. And prior to coming to DED, he worked as an operations manager at a nonprofit here in Lincoln. We also have with us today Jacqueline Morrison. Jacqueline is the Incentives Division Administrator. She leads several programs that her team is responsible for, including the Key Employer and Jobs Retention Act, the Renewable Chemical Production Act, the Nebraska Transformational Projects Act, and what we're here to talk about today, of course, ImagiNE Nebraska Act. Before she came to the Department of Economic Development, Jacqueline worked as a tax attorney with the Nebraska Department of Revenue, and she holds both a degree in accounting and a Juris Doctorate from attending law school. So we certainly have two very qualified people joining us, and I'm going to turn it over. I think Tom is going to lead the presentation today. So Tom, I'm going to turn it over to you, and thank you very much for being with us.
Sounds good. Thanks, Roberta, and thanks for having us. It's my understanding that Roberta is going to watch the chat and facilitate any questions that are coming in, so we'll get those answered. We have a pretty good amount of information for you today. ImagiNE can get complicated, but this is kind of a high-level overview, so I'm sure there will be questions. We'll get right into it. Maybe. Yeah, we will. Okay, just the kind of typical disclaimer. This PowerPoint's not intended to be a guidance document. The imagine.nebraska.gov website is going to have the most up-to-date information. So, activities get added, the legislature makes changes, the website is going to have all the information about that pretty much right away. Okay, so first, what is ImagiNE? ImagiNE is kind of the flagship incentives program for the state. It's kind of If you're familiar with Nebraska Advantage, the intent was to take advantage and kind of eliminate some of the problems people had with it, streamline it, make it less complicated and easier for people to participate in. So it's been simplified for ease of compliance. It's scaled for small to large businesses. There's incentives in there that are designed to help train and recruit talent, which is a little different from Advantage. Didn't have that. It's available statewide. It's accessible to multiple industries, which we'll cover here in a little bit. And like I said, it's streamlined to save time and costs. So on a basic level, ImagiNE can kind of break down into these 3 steps that we like a lot. All of our marketing materials kind of try to follow these 3 steps, and it's just qualify, earn, and use. So step 1, qualify, is performance-based. So businesses qualify for incentives by adding full-time equivalent employees and making new investment in the state. Each application level has different requirements. That's one of the ways that ImagiNE can kind of be tailored. Some have higher employment requirements, lower employment requirements, all those kinds of things. Step 2 is earn. So when businesses meet the required employment and investment levels laid out by their ImagiNE agreement, they begin generating those tax credits, earning any exemptions, refunds, anything else that they're entitled to after that. And then step 3 is use. So they've qualified, they've earned their credits, and tax credits can be used to offset tax liabilities or to receive a refund for some eligible expenditures, which we will also go over here in a little bit. All right, so the application process kind of laid out in a nice chart for you. The online applications can only be submitted online. There's a $5,000 application fee. You can submit that online at the time of application. You can mail a paper check. You can do an ACH transfer. Your Nebraska income tax ID is required to create an online account. So if you don't have one of those, you won't be able to apply. And after you apply, you receive that application date, which is important because the application date is the date where the investments that you make start counting towards your requirements. Employees added start counting, all those things. After the online application, we're going to reach out and ask for some supplemental information. One of the consultants on my team is assigned the application, and then they reach out to you directly. We'll ask for base year employment information, estimates of the incentives that you're going to use, and information about any additional entities that are operating at the same location.
So one thing I would just add here, there was a legislative change this particular session. And so if you have been familiar with ImagiNE, and we're just kind of giving you some updates as we go through, one of the requirements that is added is that you're going to have to provide a copy of the property tax valuations for the locations. And so we're going to just ask people to go online, go to your local county assessor, get the value of the location or the property where you're going to build, and include that in your supplemental information. So that information is pretty hot off the press, so we haven't even updated our slide deck to include it. But if you are doing an ImagiNE application, that's something you also want to include, is what is the valuation of that property where the location will be.
I think I stayed on camera the whole time Jacqueline was talking, so next time I'll slide the camera over that way so you don't have to stare at me listening to Jacqueline. Anyway, so approval or denial. Applications are approved or denied within 90 days of the application. The 90 days does not include any time where the Department of Economic Development is waiting for a response. So once we reach out and ask for that supplemental information, the 90 days stops. Once it's applied, it starts again, and so on. And then finally, we have the agreement. The agreement is issued within 90 days of the application approval, typically a lot faster than that. Businesses are eligible to be approved for a loan through the ImagiNE Nebraska Revolving Loan Fund once they have their agreement. This next slide is an example of some of the agreement lengths. So ImagiNE has 3 periods similar to Advantage. There's the ramp up period, which is the period of time given for the business to reach those levels laid out by their agreement. One of the most common questions we get is, how long do I have to do it? A lot of people are under the impression that they have to meet their levels in the same year they apply, which is not the case. The ramp up period ends at the 4th year after the year in which you applied. So for example, if you apply this year, your ramp up period would end December 31st, 2026. And then once you reach those qualification requirements, you begin the performance period, which is where those credits are actually generated and earned. That's a 7-year period. And then you enter the carryover period, which is a 3-year period after the performance period, where you can use any credits that you hadn't used during the performance period. So no new credits are generated during carryover, but you can still use the ones that you have. Okay, so step 1 is kind of where everybody starts, is which level do we qualify for? there are 8 levels, and as we alluded to in the beginning, they kind of range from small investments to really, really large investments. So economic redevelopment areas, the locations included in those agreements can only be within an economic redevelopment area. I believe we have a slide about that later on. But on the imagine.nebraska.gov website, if you go to the application levels page and click on economic redevelopment areas, if you scroll down to the bottom, there's an interactive map where you can actually type in the address of the location and it can tell you if it's in an economic redevelopment area or not. Another thing to note about economic redevelopment areas is it's the only level with a cap on the investment. So over on investment required, it says 250,000 to $1 million. You will only earn credits up to $1 million invested. All the other levels, you can go above the investment requirement and you'll generate credits on anything above the requirement.
So a couple of things I would add about this slide.
Well, yeah, but I'm talking. You don't have your mic on. It thinks I'm talking.
Does it?
So yeah.
Oh, okay. Well, we'll just switch. We're sitting beside each other. So a couple of things that I'll add here is that wage threshold is set each year, and we base it on the Nebraska average wage. And so one of the things to consider when people are applying for ImagiNE Nebraska is which year you are going to apply in. And to give you an example, last year, the Nebraska average wage, I believe, was right around $23. And so for anyone who applied in 2021, their wage requirement for quality jobs and quality job investment would have been $23. Well, in 2022 with inflation, that amount went up to $24.73. It could potentially go up again next year. And so that's something a company should probably monitor and look at to determine when you are going to apply, do you want to lock in that wage rate for this year? Or do you kind of want to gamble and see if it goes up or down, because it is a moving target on the wage rates. The other thing I do make sure that we tell companies is the wage rate is not the starting wage rate. So let's say you were adding 20 employees in year 1 of your ramp up period, and you started everyone at $20 an hour, but you knew that you were going to be giving raises of 5% or 10% over the next couple of years. You just have to be at that wage rate before the end of your ramp up period. And so you have sometimes a little over 4 years to get the employees that you need to the wage rate. And so I kind of tell companies, look at your long-term plan, not just what you plan to do this year, but what do you plan to do in the next 4 years? Some people might be adding 30 jobs that are at $15 an hour, but they know that they're going to add 10 manager jobs that might get them to the 22, 25. And it's not that all of the employees that you add at the location have to be making that wage. It's at least the required level. So for instance, if you were at growth and expansion, you have to have at least 10 employees that were added making $22.25. But if you end up adding 30 employees and half of them make $18 and the other half make $22.25, you will still qualify. And so just some important things to note as you're planning, that it's not just about year 1, but you're looking year 0 to 4. The other thing that we get a lot of questions on is what happens if I add investment over the $1 million or the $5 million? I know that I'm going to meet $1 million in year 4, but in year 6, I plan to do a second investment at my location that's $5 million. Do I get credit for that? And the answer is yes. The investment requirement is just the minimum. And so anything you add in that performance period, or actually anything over the course of the agreement. So from the time you complete your application through the end of your performance period, any investment you make in qualified property from 1 million to 10 million, even 20 million, you would get credit, you would get earn investment credits for. So.
All right, and we're not going to go over every single level, but just another thing to note, this quality jobs level is the only one that doesn't have an investment requirement. That one is just focused on quality jobs, as the name suggests. Okay, yeah, this is that map that I was talking about on the website for economic redevelopment areas. So they're all laid out in either blue or orange. Blue and orange are both economic redevelopment areas. It just distinguishes whether it's a federal opportunity zone or not. So as long as it's in a blue or orange zone, it's in an economic redevelopment area. And like I said, that map is found on the economic redevelopment areas page of our website, if you scroll down to the bottom. Okay, so now we get into agreements. There are 4 agreement types. This is where applicants get a little bit of flexibility here. So you can set up your ImagiNE agreement for a single qualified location. If you only want to include a specific location, that's fine. You can include all qualified locations within a county, all qualified locations within more than one county, or you can select to include all qualified locations in Nebraska. So agreements can be added, or locations can be added over the course of an agreement. So this kind of lets you decide if you want to have multiple separate ImagiNE agreements. Some companies choose to do that. Some companies choose to just kind of future-proof their agreement and just automatically include all qualified locations in Nebraska. So if you build a new location, it's doing qualified activity, the location is qualified, that will automatically have to be included in your ImagiNE agreement. So there's some flexibility there. There's some pros and cons to doing it both ways, but there's some high-level strategic planning that some companies do on this that have a lot of ImagiNE agreements going at once.
So I would just say here, I think they said we're okay, but we'll do it this way. I think Tom might have said it, but I want to make sure we say it 5 to 10 times. Once you decide on your agreement type, that cannot be changed. So when you submit an application, you will decide at the time that you submit the application what your type will be. The levels can be changed up through the end of your ramp up period, which is about 4 years from the time of your application. But that type, you will be kind of wedded to it. And the reason why that is really important strategically is if you have, let's say you have a company that knows we have 2 different locations. One I'm just going to use is in Douglas County or in Sarpy County, 2 separate counties. And I know for my Douglas County location, I'm going to be doing some investment in year 1. And then maybe my Sarpy County location, I'm going to be doing a lot of investment in year 6. There you might want to kind of weigh your strategy of, do I need the jobs that I'm going to be adding at both locations to be able to qualify? So maybe I'm adding 5 here, 5 in one location and 5 in the other. Then I would want to include both because I need them both to get to my 10 job requirement. Or another strategic decision that you might make is, I want to have 2 separate agreements because I'm adding investments so far out on my Sarpy location that I want to be able to get those credits for a longer period of time. Because if I'm already 6 years into my ImagiNE agreement, when I make the investment at my Sarpy County location, I'm really only getting 3 years worth of benefits, whereas I could have been getting up to 9 or 10 years worth of benefits if I had had 2 separate agreements. And so it really depends on the strategy and the growth that the companies are planning to do on what agreement type that you want to make. And if I had to say what is the most important decision that you will have to make at the time of application, it will be the agreement type rather than the level. Back over.
They say we're fine. Okay, so ImagiNE is the qualification is determined by the activity happening at the location. An important distinction to make is we're not necessarily talking about the activity done by the overall company. We're talking about the specific locations that are going to be included in the ImagiNE agreement. And that's determined by what activities the employees are doing. So a majority of the employees need to be engaged in one of these qualified location activities in order for the location to be considered qualified. And I'm not going to read all these to you, but we will highlight some things. Manufacturing is our biggest one. Most of our applications come from manufacturing. And this also includes pre-production services. And then there have been a couple of legislative changes on this next page. So post-harvest crop activities, except cotton ginning and the processing of tangible personal property, were both added by the legislature. Those weren't in the original statute, but those are covered now. And then we also have a 75% export exception, which is a location that derives at least 75% of its revenue from products or services delivered to customers outside of Nebraska, can qualify for benefits even if its activities are not in the eligible activities list. One of the important things here is identifying what is being exported outside of Nebraska. So that's something to think about if you apply with that activity. And as part of the process, there are 2 optional certifications that you can utilize if you'd like to. You have the option of requesting Economic Development or the Department of Revenue to review and certify one or both of these things. Certification is binding on the Department of Revenue. If review and certification is not requested, these items could be subject to later audit. So the Department of Economic Development handles the qualified location certification. That's a form on our website. It's on the documents page on forms and templates. It's a fillable PDF. So you just go in, input all the information. It asks for some supplemental documentation as well. Basically, we want to know what the company does, what's happening at the location. If you want to qualify based on activities, we'll ask for a breakdown of what the employees are engaged in now, and then a breakdown of what you expect the employees to be engaged in upon qualification. We'll ask for sufficient benefits information to make sure that's all in line. And there's a few other items we'll ask for too. If you're requesting certification based on 75% export exception, we'll ask for some financial documents. And my team will review those, and DED will ultimately make a determination about whether we believe the new location is qualified or not. The base year employment certification, Department of Revenue handles that completely. That's submitted to them, and they handle the entire process. That's just them certifying the base year employment, compensation, and wage levels. So they'll get your number of base year employment, and that'll be certified for the future, and you won't be subject to an audit on that.
I'll add a few things here on the qualified location. Just one thing, and I'm not sure if Tom pointed this out, but when we look at majority of employees at the location, they do not all have to be participating in the same activity. So if you have half of your employees doing headquarter activities and then another half doing manufacturing, or I shouldn't say half, let's say you had 30% doing headquarter, 30% doing manufacturing. That means 60% of your employees would be participating in a qualified activity. Thus, your location would be qualified. So it's not always it doesn't have to be the same activity. It could be the aggregate of different activities. The base year employment certification also is an optional certification, but a lot of people are choosing to do it. It's a longer process. You have to provide more documents than the regular application. But what you do is you get your base year number for employment. So let's say you send all of your documentation in and the Department of Revenue says, we think you had 25 employees in your base year. You would know that in order to meet your levels, you'd have to go from 25 to 35, and 35 is going to be your number. The worst thing you could do is not know for sure what your base year your base year number is. So let's say you thought it was 10, but it was really 9, and then you added 10 employees, or you thought you had added the amount of employees to make 10, but really your base year number was a little bit off. It wasn't exactly what you thought. It's possible that you could come up short. And so if you know for sure, like the people who know absolutely is when your base year is 0 because you started a new location. Or if you know for sure you had 2 employees who had worked 2 employees or 10 employees. I think it gets a little bit more complicated when you have staff turnover, or you have an organization that has 30 to 40 employees. Some people are working overtime. And so that could change what your base year number is, or your assumption of your base year number. If you're going to be right at adding 5 employees, or right at 10, you may not have a lot of wiggle room. But if you were, say, like adding 17 to 20 and you only had to add 10, you may not be as worried or concerned about it. So it is a practical decision that each company has to make. But I do tell people, if you aren't sure about ImagiNE or how that base year number is calculated, or you aren't sure about how many employees you are going to be adding over that minimum threshold, it might be really nice to get that base year certification. But again, it's a longer process. It does not have to be done if you don't want to, but it really is there to protect you in the event that you make a mistake or your numbers are a little bit off later. The same thing with the qualified location is so this is the shot that you get with the Department of Economic Development. Essentially, is you can plead your case to us and say, we believe that our location is certified. And if we agree with you and we issue that letter and say you're good, you are good for the life of the agreement. Revenue can't later come back and say, well, what exactly are you doing now? Or, what was that activity? Was it truly processing or was it manufacturing? You have kind of our seal of approval that as long as you're doing what you told us you were doing, you'll be okay. Again, this is a situation where if you're doing something and you're kind of on the cusp, you're not really sure if it's qualified or not. You don't want to get 6 years into the agreement, get audited by the Department of Revenue, and they say, we don't really think this is a qualified activity. So if you have, some people know for sure we're doing manufacturing and there are no kind of questions. Other people might have called and said, is this really processing? Or are we really turning this into a different type of product? And that can get a little more tricky. And so you may want to do that location certification.
All right, this is a breakdown of each application level and the credits to be earned. So for example, at the growth and expansion level, we get a 4% wage credit on the average wages paid to new employees, 4% investment credit. And then something to note is some of these levels have things like sales and use tax exemptions, personal property tax exemptions. Tends to be those last three: quality jobs, investment, mega project, and modernization. At the other levels, we'll get into this, I'm sure, but at the other levels, you can use your credits to offset your sales and use tax liability. But at these levels, it's a straight up exemption. Is there anything you want to add on this? All right, so now we're going to talk a little bit about qualifying investment. Investment is the value of qualified property incorporated into or used at the qualified locations. Qualified property includes tangible property subject to depreciation, amortization, or other recovery. Exceptions include aircraft, barges, motor vehicles, rolling stock, or watercraft, and owned or leased property. For a lease investment, it's the average net annual rent times the number of years of the lease, not to exceed 10 years. So if you're leasing a building as opposed to constructing a new building, that lease is still going to count as an investment for the purposes of ImagiNE. And as far as determining when something is placed in service at the location, there's a guidance memo on the imagine.nebraska.gov website that breaks down when something is considered placed in service. All right, and here we have an example of the calculations of credits. This is broken down by year, so it's kind of a lot of information in your face all at once. But in this example, it's a manufacturer in Columbus, Nebraska that's expanding their business. Their estimated investment is $5 million. Estimated new jobs is 25 FTEs. Estimated wages is $19 an hour. Usually when we do estimates, we also account for about a 2% cost of living adjustment each year. In this example, the year of application is 2022. And the expansion is completed in stages. So on this one, you can see that they applied in 2022. That first year, they invested $500,000. Next year, they invested $4 million, which put them at above their investment requirement, but they haven't added any employees yet. So in the next year, their investment is still $4 million. They have generated an investment credit of $160,000 because the same year they added 15 FTEs, which satisfied both the FTE and the investment requirement. So the last year of your ramp up period is also the first year of your performance period. There's a little bit of overlap there. Then it kind of just goes down this chart. It's like their cumulative investment stays at $5 million, total FTE is 25. So for the investment credit, it is 4% of that total of $5 million, which is $200,000. And the wage credit is 6% of the wages to those new FTEs, which is $379,700 in this example, for a total of $579,700 in tax credits.
So okay, so
Okay, I'm gonna.
That's what we were fearful of, is that. So one thing on that roll manufacturing, we, which was the slide we were just showing, go back to it for a second. Just wanted to point out there was a legislative change here as well, in that when we first were going through the materials for ImagiNE, it seemed like you could only, for the roll manufacturing, you could only have a location, you could only have locations in one you can only have one location under rural manufacturing in one county. And so there was a legislative change this year which updated that to say if you are a rural manufacturer and you have locations in 2 rural counties or multiple locations in rural counties, as long as you are in a county outside of Sarpy, Douglas, and Lancaster, then you can include all of your manufacturing locations under this level. So that legislative change, if you saw it or were wondering what exactly does it do, it enables you to add multiple locations in multiple counties, as long as they're all rural, under this particular level. So just wanted to point that out.
Okay, now that we're all excited about credits, we're going to talk about how to use them. We have slides for each one of these, so we're going to get into them. Don't worry, I'm not just going to gloss over this. But just general overview, you can use them for tax liabilities, talent recruitment expenses, infrastructure development, childcare expenses, job training, and we'll get into each one individually now. So tax liability, you can use your credits to reduce your overall Nebraska income tax liability. You can use it to reduce your Nebraska withholding liability. The only kind of caveat with withholding is that wage credits can be used to reduce your withholding liability, but investment credits cannot. And then you can also, as I mentioned before, you can use them to reduce your sales and use tax liability in the state. Credits can be used to refund sales and use tax paid for items at a qualified location, if not otherwise refunded or exempted. So the items that you're purchasing do still need to be in use at a qualified location in order for you to use your credits to reduce sales and use tax, but it is an option. Next is recruitment and childcare. Tax credits may be used to receive a refund or reimbursement of expenses incurred for these things. So for talent recruitment, activities that result in a new employee hired, this includes things like marketing, relocation costs, search firm fees, student loan payments, tuition reimbursement, down payments on a residence in Nebraska. So this allows you to really use your credits and leverage them to bring new talent into the state. If you have a highly specialized position you need a really skilled person for, you can go out and get them now. And then childcare, you can use your credits for expenses related to taxpayer-sponsored childcare that is at the qualified locations. And then these job training uses, training for a prospective or new employee by a Nebraska educational institution or other third-party trainer. This also is an aspect of the Nebraska Revolving Loan Fund. Loans received through the ImagiNE Nebraska Revolving Loan Fund can be repaid with credits. So that's another way to kind of leverage those credits right away. And one of the uses for those loans is a job training loan. Another use for the revolving loan fund is infrastructure development loans. These can be used for expenses incurred for basic physical systems, equipment, and/or facilities required for business operations at the qualified location under an ImagiNE agreement. And again, these loans are paid back using those ImagiNE credits. So you can apply for and receive a loan at the beginning of your ImagiNE agreement. And then as those credits are earned, you can use those credits to pay the loan off. So it kind of gives you more immediate access to the funds that you need to improve your infrastructure, train your people, those kinds of things. At certain levels, this includes sales and use tax exemptions. And if you're awarded a grant from the Site and Building Development Fund, you can use this in conjunction with that as well. All right, this next slide discusses the ImagiNE Revolving Loan Fund, which admittedly is not usually something that I talk about, but we're going to do our best. So eligibility, any business with an application under the ImagiNE Nebraska Act is eligible to apply, but the loan won't be issued until you have an agreement. As far as the number of loans per agreement, you can have one workforce training loan and one infrastructure development loan. Limits on that is $2 million borrowed at any times across all loan types and all ImagiNE agreements. So if you're a company that has multiple ImagiNE agreements out there, you can only borrow $2 million. And the maximum loan amount is 50% of your projected credits to be earned through ImagiNE, and or 50% of any earned and unused ImagiNE credits. As far as timing, businesses should be ready to close within 90 days of approval, and it's a 6% fixed rate. Do you want to say anything about the loan? Okay, and we know that there are a lot of businesses out there that either are in an Advantage agreement right now or just recently ended an ImagiNE agreement. They have a lot of questions about the how Advantage and ImagiNE work together, transitioning from Advantage to ImagiNE. So a question we get a lot is, if I have an Advantage agreement, can I apply for ImagiNE? The answer is maybe, like most things. If there's no overlap between your Advantage project and your ImagiNE location, a company can be in both programs. So what can't happen is you can't be earning credits in ImagiNE for something you're also earning credits for in Advantage. So for example, 2 locations in Douglas County are in Advantage, and a company applies to ImagiNE and chooses a single qualified location in Sarpy County. That would be fine. Do I lose my personal property tax exemption from Advantage if I apply for ImagiNE? No, this is a spot where it's similar to Advantage. You can elect to either keep that personal property tax exemption from Advantage, or you can elect to treat new purchases as investment for ImagiNE. Can I leave my Advantage agreement and apply for ImagiNE? That's another maybe. If you're still in the attainment period for Advantage and have not started performing, you could maybe apply for ImagiNE. If you are in your entitlement period for Advantage, applying for ImagiNE could trigger a recapture on any credits you earn from Advantage. So our advice would be, to speak to whoever gives you your financial advice about that. This next slide is kind of just a breakdown of the applications we get, what they're doing, where they're located. So most of our applications are urban right now. It kind of goes back and forth. It's usually more split down the middle than that. And then as far as the application levels, the biggest one right now is quality jobs investment. And we have growth and expansion is kind of just the default catch-all that most people can qualify for. And then the other big one is manufacturing growth and expansion rural. Got a lot of rural manufacturers applying for ImagiNE right now. And like I said, all the information, the most up-to-date information, those guidance memos, all the forms you need, the application, my contact number, the contact email if you have any questions, that's all on the imagine.nebraska.gov website. And then you can see in that screenshot up in the top right, there's a link for the revolving loan fund, which will then take you to the ImagiNE Nebraska revolving loan fund site. Okay, that's it. That's the end of the presentation. So I think we're ready for questions.
Okay, great job. Thank you, Tom and Jacqueline. We do have a couple of questions. Let's go back to the very beginning and talk about the application fee. What does that cover? And is there any application fee levels? Is there a lower amount for small businesses, or is it the same for everybody?
It's $5,000 across the board. What I will say is when you go to use your ImagiNE credits, there is a 0.5% fee on that. And the first $5,000 of that 0.5% fee, that application fee is applied to that.
Okay. What options are available for a small business who wants to add just 1 to 4 employees?
So sorry.
Just grab it.
So unfortunately, in ImagiNE, the minimum threshold is 5 employees. But one thing we do say is that 5 employees is over the ramp up period. So if you applied in May of 2022, you'd have through December of 2026 to add 5 employees. So unfortunately, with the application fee, the $5,000 fee, that came to us from the legislature, and they didn't give us any discretion in the fee. And the same with the levels. We don't have any discretion in ImagiNE and amending those levels. There are some other programs that are available to small businesses. We are kind of rolling out some new ones now. I know particularly in Omaha, there's going to be the Urban Redevelopment Act, which only requires that you add, I believe, 2 to 3 new employees. And so it's a much smaller threshold, but it was a program written very similarly to ImagiNE by an Omaha senator, and it was for economic redevelopment areas in Omaha. So there are some programs like that the state has where they are trying to re-envision and try to find out what is going to work for our small businesses. And I think if that was a program that worked, and if it does work in Omaha, I think, you could talk to your senator about potentially expanding it to all parts of the state. But unfortunately, when ImagiNE was conceptualized, the minimum threshold is 5.
Sorry, I was on mute. Talk a little bit about the wage thresholds. You mentioned that may change with inflation. What are those based on?
It's based on the average wage rate in the state. And then the application levels all have different percentages. So the quality jobs level, for example, the wage threshold is 100% of whatever the Nebraska average wage is that year. Economic redevelopment areas, I believe, is 70% of that wage. Some of them are 75. So that varies by level, but it's based on the Nebraska average wage for that year.
Okay, we have a comment about entrepreneurs in minority communities that are investing in creating jobs in sectors that currently are not eligible, things like childcare, where they're investing a lot of dollars, they're creating new jobs, but they aren't eligible. Any thoughts on maybe other programs that might be available to them, or future expansion or change to include other types of businesses like childcare?
So back to that act I was just talking about, the Urban Redevelopment Act, we are currently developing the application guidelines for that at this moment, hoping to have it launched by July 1st as my goal. It's also going to be one of our incentive programs. But again, that was, so Senator Wayne from Omaha, that was his priority bill last year. And one of the things that was conceptualized in the Urban Redevelopment Act was to open up the job categories so that it wasn't tied to basically the qualified location criteria or the qualified activities that ImagiNE was, with the idea that small businesses don't have the same needs or aren't necessarily the same industries as the larger businesses for ImagiNE. So that particular act would be accessible to ERAs in the South Omaha area, the North Omaha area, and you don't have to be, you could be in any, I guess it opens it up to any industry is what I'm trying to say. So childcare could be part of it, restaurants could be part of it. That will be coming down the line, and those particular businesses that were mentioned would be eligible. The tax structure is a little bit different in that you don't earn as many incentives as ImagiNE allows, because the program is capped at $8 million total, but it does provide another opportunity for those small businesses who aren't in the ImagiNE targeted industries.
So one of the changes that the legislature made this year had to do with remote workers. So I have a question, a two-part question. If you have remote workers or workers that are working a hybrid schedule, they're partly remote, how does this impact the project? And what if the employees live in multiple counties? Would this impact how you apply for a project?
Okay, so the legislative change, Jacqueline will probably have to check me on this. The legislative change allows for remote workers who spend time at both the qualified location and their Nebraska residents to be included in that FTE count. So if I'm understanding the question correctly, the county that the employee is residing in isn't necessarily an issue as long as they reside in Nebraska and as long as they're working on things that are pertinent to the qualified location. Does that answer the question?
So I just want to pull up the question. Make sure it says, what if employees live in multiple counties? Would this impact how you apply for a project? So one of the differences between Advantage and ImagiNE is that we don't look at projects, we look at locations. And so the application would be for a location specifically. So no matter what your employees are doing, if you're applying for ImagiNE, you're putting down an address and saying, it's this particular location where we're going to add jobs. and where we're going to add investment. Once you have basically determined that for your remote or your hybrid workers with the legislative change, if they work sometime at the location and the other part of their time is work at their house, and you can show that their residence is in the state of Nebraska, you would get credit for adding that employee at the location, as long as the work that they're doing from their home is related to the work that they would be doing in the office at that particular location, no matter what county that they live in, as long as it's in Nebraska.
That's what I was trying to say.
I don't see any other questions in the chat right at the moment. I'm curious, Tom, with the optional certification that you talked about, you mentioned it takes 90 days for the location part and 180 days for the other part. Is that, are you averaging a shorter time than that?
Yeah, 90 days is the maximum amount of time we can take.
Okay.
We try to get them done a lot faster.
And are most businesses doing that? Are they doing the optional certification?
A lot of businesses are doing the base year certification. There's less location certifications.
Okay. Holly's telling me I've got another question here in the chat. Okay, I think we talked a bit about this, but let's make sure we got the question answered. When do the county locations come into play? Is that only for certain type of agreements or for all?
That's going to depend on your agreement type. So those 4 agreement types we went over: single location, all locations of one county, all locations of more than one county, all across the state. You have to select one of those regardless of what application level you select. Those apply to every application level. So whether that's going to come into play or not is it depends on the business, where their locations are, what kind of agreement they want to do, if they want to have a separate location for each agreement, or if they want to include all the locations in a county on one agreement. But yeah, if you select an agreement type that deals with specific counties, then that's when it comes into play.
The only thing I would add to what Tom said is the counties can also come into play when you are looking at that rural manufacturing level. And so in order to be able to participate, let's say in rural manufacturing, it has to be a county outside of one of the larger counties. So in deciding, exactly as Tom said, in deciding what your agreement type will be, and then also if you want to qualify for a specific level that is in a rural county.
Okay, one more question that came in. Can a company do more than one application, perhaps at different levels?
Yeah, you can. The only thing with that is you'll have to pay that $5,000 application fee for each application. But kind of like we talked about when we were talking about the agreement type, some companies do elect to have a separate agreement for each of their locations. That way they can take advantage of that full performance period. I've run into companies who they say, oh, well, we have a location that qualifies for rural manufacturing, but we also have a location in Omaha that doesn't. So they would want to do a rural manufacturing agreement for that one, and then a urban manufacturing agreement for the Omaha location. You can do that as well.
So what's the best way for a business to reach out to the Department of Economic Development? Who's their first contact when they're looking at this process? Maybe they've gone to the website, they've found your brochure, they think they qualify. What's their best first contact with all of you?
Yeah, so at the bottom of the imagine.nebraska.gov homepage, there is an email address, ded.imagine@nebraska.gov. That goes straight to the Imagine team. If they have a question, they can always send an email there, and I'll assign it to one of the consultants. Also, there's a phone number at the bottom, 402-471-6336. That's actually my direct line. So if they call that number and I'm at my desk, then they'll be talking right to me.
Perfect. Thank you both so much for your time today, Jacqueline and Tom. I think you've done a wonderful job, and we're happy to be able to help you spread the information, get the word out. This is so important for Nebraska to remain competitive, that we have an incentive program. And so we're happy to get this information out to our businesses and to our members. So thank you for making time to provide answers to the questions and share the information. Any closing comments, Jacqueline or Tom, either of you?
Not really, just thanks for letting us talk to you guys about ImagiNE today.
Okay, great. Thank you very much. Thanks everyone for joining. And with that, we will adjourn. Thank you.
Thank you.